The number of unsold properties in the Greater Toronto Area remains at record highs as we go towards the end of the year. We haven't seen this prolonged level of unsold properties in the Greater Toronto Area since 2007 and 2008 during the Great Financial Crisis. Yeah. The media headlines right now that you're seeing all over the news is completely misleading. And they're trying to paint a rosy picture with the fact that sales are up 40% from last year, which our Toronto Real Estate Board is saying. To me, it's actually a horrible comparison because last year was so bad, really, really bad. So if you compare to that year, of course it's going up, right? That's like saying you're driving on a highway with a max speed of 100 kilometers an hour. Last year, we were going at 30 kilometers an hour. And now we've gone up to 60 kilometers an hour. You are still 40 kilometers per hour off the 100 kilometers per hour that we should be going at, and that's what we should be accustomed to. Do you see what I mean? The real problem we have here is that the unsold inventory remains elevated, very high, despite it being slowly chipped away as more and more buyers are coming back right now. The question that is on my mind right now is how quickly can the returning buyers chip away at this excess or heightened level of unsold properties in the Greater Toronto Area right now? This is exactly what I'll be covering in this video. My name is Zen. If you find this content helpful, please like and subscribe. Now, here's the problem and the spin that traditional media, who doesn't really do a deep dive into the numbers, won't be able to tell you. If you look at this chart closely, you can see that they are reporting on that big increase in the red box I highlighted. And from the purple line to the dotted white line, sure, that looks great when you're only talking about the numbers with that kind of frame of reference in mind. Like you're very isolated into that thought process. But look at the purple line. It's so far below everything else, which makes it a very bad baseline to compare it from. And this is the point I'm trying to get at. Now, let me superimpose what it should look like for you. You see that glowing pink line? That's the 10-year average for sales. We should be there for a normal market. And you can see that the yellow and the blue lines are above that pink line because those were the crazy years of the pandemic for sales. We are currently right now 25% below the 10-year average. This is why I said earlier in my analogy, yes, sales are up 40% from last year, but it's like increasing your speed on a 100 kilometer per hour highway from 30 kilometers an hour to 60 kilometers an hour. Yeah, you're going up, but you're still too slow for what the speed limit should be, or the 10-year average. Now, let me show you this chart that is my cause of concern. This chart here is the unsold inventory. That red line is when we have more than 20,000 unsold properties or active listings in the Greater Toronto Area. We haven't had 7 months of being above this red line since the Great Financial Crisis. Yup, that is my concern. And while sales have picked up, like you saw in the previous charts, they haven't picked up fast enough to clear the high of the 25,000 unsold properties that hit the market as we started our fall market in September. Now, here's a silver lining. It is coming down, and seasonally speaking, most sellers delist their properties starting in December towards middle of December. That's why you can also see in this chart that all the colored lines drop off towards the end of December. Now, what I am personally watching for to dictate how strong 2025 real estate year is going to be is 2 things. Number 1, the amount of listings that fall off the market in December. The last 10 years, we historically have seen 42% listings drop off, meaning that if we see something similar to that number, we are reverting back to the norm, getting back to that 100 kilometers per hour. However, I have my suspicion. We may not be at that 42% because I believe that a lot of sellers who are selling right now are investors who will likely leave their property on the market since it's vacant. They're not living in it, it's not tenanted, might as well keep it on the market. And if that is the case, the unsold inventory will remain higher than the normal drop off of 42%. Now, it may not be over 20,000 because I think that would be rather ridiculous, but it's still going to be high seasonally speaking. The second thing I'm looking for is obviously the sentiment that's going to be caused by the rate cut that's happening later this week, which I'll touch more on in the next video. What I can say right now is that the rate cuts have made a difference. They 100% have made a difference. Buyers are back, and it's very rare that we have more sales in November than we do in September in the fall market. It's only ever happened 5 times going all the way back to 1995, or makes up 8% of kind of the years. So if you look at it from that frame point, it's pretty important. It's moved the needle. And this year, it's also a pretty big increase of 10% comparing the November sold properties to the September sold properties. So it's obvious the rate cuts are having an effect on the market for the buyers and their sentiment. It's moving the needle. So while it's bad, there is a silver lining to this. But with all things real estate now, it's so location dependent and personal reason driven that you should not be applying everything I'm saying right now verbatim to your own personal situation because there are 100% going to be nuances. So you want to chat about your own unique situation, you could go to the link on the screen right here to book a call with me. Now, as for pricing, it's basically the same. You can see here we're like down a smidgen from October, which is super normal, like seasonally speaking. This meant that prices in the fall essentially peaked in October, which is also normal because the quantity of detached homes, which tends to skew the average price up more, generally gets sold in October. A common number you'll see being reported right now is that year over year, prices are up 2.6%, which basically brings us back to where prices kind of were before things took off in the first quarter of 2022. You see there's a very small gap over here. And the most rational reason, if you are a bear, for prices to come down in 2025 really is going to be this recession and the job loss. But at the moment right now, it looks like the speed of the rate cuts may counteract this job loss. But I'm going to provide more context to that later on in this month as I break down more of the numbers that we just got as part of my end of the year review. The last thing I wanted to cover here before I give you the historic update is the all-important months of inventory. Overall, it stayed steady at 3.8 for the entire Greater Toronto area. No real change. Meaning this, the market speed is stable. It's not going down. It's not going up. It's exactly where it is last month. But as we break it down some more, you can see in these charts over here that Toronto is behaving much differently than the suburbs of the 905. For freehold Toronto property homes, the months of inventory is coming down rather fast. And oddly enough, Toronto condos, the months of inventory, despite it remaining fairly high and elevated at 4.76, it is coming down at a surprisingly fast rate. We're now off the highs of 7 months of inventory back in September when we had a huge surge of listings come online. So it is a huge improvement. But again, still elevated, relatively speaking, compared to the rest of the market. As for the suburbs or the 905, the months of inventory is increasing on both the freehold properties, so your detached semis and your towns. It's also increasing in the condo space as well. So something to watch for the next few months is how the market is going to get really, really segmented depending on what you're buying and selling. And that's why I've been saying things are very isolated right now and very different. Now, when we look at the historic numbers to get a gauge of where we stand, you can see currently the unsold inventory remains very high, higher than even last year. And this is why I was saying that I have concerns that we are staying this elevated for the number of unsold properties, in this year. As for sales, yes, they have picked up and they're higher than the last 2 years, which I was saying earlier, which the last 2 years were like multi-decade lows. But it's nowhere near where it should be, historically speaking. That's why the bar is so high. Now, as for new listings, we're kind of the same thing. So it means that we didn't see any additional surge of listings outside of that bulk of listings we got in September. And I don't suspect the next surge of listings to happen until spring, maybe say around March, which makes our months of inventory fairly elevated right now, despite not many new listings coming online, which is kind of the theme of the video. It's better than last year. We're improving, but nowhere near the norms of where we should be normally at this time of year. So one of the things that I did mention earlier that's going to have a really big impact on the market quite fast is the sentiment of the buyers caused by these rate cuts and lower mortgage rates. We're all about to have mortgage rates come down as the mortgage rate wars between the big banks are starting. And this is exactly what I talk about in this video over here. It's definitely going to be another factor as we're gearing up for the 2025 real estate market that will increase the sentiment and will increase the confidence of the buyers. So make sure you watch the next video to really understand the nuances of how this mortgage war is starting to happen. Talk to you in that video.